One.
Good morning. Welcome to Stock Market Today. It's Tuesday, October 15th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished slightly lower in Monday's trading, and sector performance was mixed, with the REITs and the financials leading while materials and utilities lagged. The treasuries, they were closed for the Columbus Day holiday. The dollar was stronger against the euro, but little changed against the yen. Gold added 60 basis points, and oil was lower. WTI settling down about 2% on the day. As we get to the desk this morning, a little bit of a rebound here. S&P futures are up 30 basis points after yesterday's holidays trading. Treasuries resumed trading and are rallying across the curve. Dollar is a bit weaker versus the yen, but stronger against the euro. Gold is little change, and WTI crude is down 30 basis points, but well off the worst levels of the morning. And the bank earnings are coming in. JP Morgan, Citi, Wells Fargo, Goldman Sachs, all reporting before the bell today. We'll touch on the banks a little later in the show. Right now, for the S&P 500, I guess in a quiet holidays trading, the fact that we held Friday's gap is encouraging. Key support is at the 200-day moving average near 28.55. Then the August lows are more important at the 28.20 level. Resistance remains in the same place that we've been highlighting. We're kind of in the resistance zone right now. 29.50 to 3,000 is a bit of a resistance zone that for now is being respected. Encouragingly, the RSI is holding bullish ranges as it's ticked back above 50 and stayed there for the past couple of days. However, Chaikin money flow does remain on a bearish reading, though yesterday ever so slightly. If you squint, you can see that it began to tick higher on the day yesterday. Turning now to our market in a minute. What are we writing about in our note today to Chaikin Analytics clients? Well, it's Tuesday, so it's relative strength day. I look at the sector relative strength across the S&P 500. But first, as we said, stocks tread water after Friday's gap higher. Tech is the big group that I'm watching. Technology breaks up and out of a recent consolidation, both on absolute and relative basis. We'll take a look at that. Also watching the bond proxies closely. They are starting to see waning relative strength. Remember yesterday we talked about the potential bottoming process beginning to play out in the 10-year yield. Well, that's starting to weigh on the bond proxies in the equity market. Think REITs, think utilities. All eyes are going to be on the financials here this week as banks begin to report earnings. And as I said, futures do point to a higher open here today. Looking at the major indices now from a power bar perspective, Dow gave back 13 bips yesterday, 7 bears to 3 bullish stocks. S&P 500 virtually unchanged. 100 bulls to 91 bears there. NASDAQ is dead even, 18 to 18 bulls to bears on a relatively flat day of trading. Small cap slight underperformer on the day, down 35 basis points, but the power bar ratio there still skewed in favor of the bulls. 520 bullish or very bullish stocks in that group for 380 bearish or very bearish stocks. That's old data on the bonds, although I will note that they are trading higher here this morning. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. The major markets across the board, however, are mixed. Let's hit our stock of the day now, and this is one that has been beat up and maybe making a turn. Let's take a look at Signet Jewelers here. SIG, the ticker symbol, closed at 1547, down over 9% yesterday, but it does have a very bullish power gauge rating due to attractive financial metrics, strong price volume activity, and strong earnings performance. Does have negative expert activity, but let's take a look. Very bullish stock, strong trend, strong industry group. Remember, 20 factors, 5 in each of these 4 categories. Tell us if this is something we want to consider. And then we look at the timing and figure out if now is the time to consider it. And the answer is going to be a no, but we're watching closely. The reason we're a no is because the stock is still an underperformer relative to the market. Remember, we want that very bullish rating to meet a stock that is outperforming. That is not the case for Signet here, although what I will say is that the relative underperformance has been showing signs of fading of late. We're starting to see some better relative performance, just not enough yet to get us interested. Overbought, oversold indicator rounding out of an oversold condition. Chaikin money flow is mixed. As we said, the stock is above the long-term trend line. So this one looks like it's in early days of potentially making a turn, but still a little bit too early for me. Does that mean I throw it out? Absolutely not. Going to add it to a bullish watch list here this morning, and if that relative strength continues to improve, it might make a compelling turnaround opportunity. We'll keep an eye on Signet, adding it to a bullish watch list here today. Looking at the sector tracker now, the movement of the major sectors over the last 5 days. Top of the board, still the names and the areas of the market that are levered to those improving trade relations between the U.S. and China. Think industrials, think energy, think technology. Discretionary materials and fins are middle of the road. Comms and healthcare are also positive over the past 5 days. Remember what I said about the bond proxies? Also the defensive areas of the market. As rates begin to stabilize, the bond proxies, REITs, and utilities have come under pressure. At the same time, a little bit more of a risk-on tone towards the tail end of last week has weighed on the staples. Remember, investors have been rotating into staples as they were getting a little bit more defensive. Market starts to rally, money rotates out of the staples into some of the cyclical areas of the market, and that has played out over the past 5 trading days. Now, let's look at the industry in focus today. This is a group that we have been bullish on and remain bullish. It's the home builder services, which over the past 6 months has outperformed the S&P 500 by over 6%. And the power bar ratio, which measures future potential, hints that that trend is likely to continue. It's very strong with 18 bullish or very bullish stocks for only 3 bearish or very bearish stocks. It's currently ranked number 6 of the 21 subsectors that we look at. So some of the indicative names there, names you might want to consider. Taylor Morrison, TMHC, has a very bullish rating. MI Homes, MHO, very bullish rating. And TriPoint Group, TPH, also with a very bullish rating. And if we take a look at the XHB, the ETF that tracks the home builders, we can see immediately that it has a very bullish Chaikin Power Gauge ETF rating, and it's in a strong trend above the rising long-term trend line. Right? Market and model are in agreement here for this fund, as it's been a strong outperformer, as we've said, rounding out of an oversold position with persistently bullish money flow really since the April timeframe. So if you're looking for long ideas in this market, I think you want to start to drill down on a fund like XHB, start to take a look at some of the 18 bullish or very bullish stocks within that fund and start to think about if any of them make sense with your process, or if you're following along with the process that we advocate here. Home builders continues to be a strong area of the market. We've liked it for a while. We continue to like it. I think you want to take a look at the builders or potentially look for an opportunity just in the ETF itself. Taking a look at what's trending now. Yesterday's S&P 500, gainers and losers, our movers and shakers. Hewlett-Packard Enterprises up 4% as that stock caught an upgrade yesterday from one of the sell-side shops. Also adding 4% plus, Abiomed continues to rebound. Stock traded at a 52-week low last week, and for the past few days has been rebounding there. Still with a bearish rating rather at Chaikin Analytics, but it is rebounding from oversold conditions. Again, maybe some of the rotation out of the safe havens and into some of the beaten down areas of the market. AMD up 2.6% yesterday. Didn't see anything company specific on that name, but we have been noting for a while that the chip stocks are acting well. AMD is very bearish in our model. ILMN, no real news there as well, up 2.5%. And Align also kind of lumping in with Abiomed, one of these healthcare equipment companies that is rebounding, now nearly back to break even on the year. On the loser side of the board, IPG Photonics, IPGP, the ticker symbol there, has a very bearish Chaikin Power Gauge rating, been bearish for a while, caught a downgrade yesterday to send the stock lower by 7.8%. And what I will say is that the downgrade came from my former firm. So I happen to know the analyst, and I know that he does good work and thoughtful work. So probably pays to pay attention to that downgrade there. Nectar continues to be volatile on both sides of the board here over the past few days, down 7% yesterday. CF, nothing company specific, down 3.26% on the day yesterday. MOS, again, nothing company specific, to take that stock lower by 3%. Tapestry, TPR, caught a downgrade. That stock lower by 2.8% on the day. And again, we're going to start to get to the point in the cycle now, time of the quarter where earnings are going to begin to drive activity. We're starting to see the banks roll in, as I said. So let's start there. All eyes are going to be on the banks this week, and I'm taking a look here at KBE, that Spider S&P Bank ETF, which has been in a choppy trading range, effectively has gone nowhere for the past year, and it's been an underperformer relative to the SPY since February, a steady downtrend. But now we're starting to try to break through that downtrend line. The fund itself on an absolute basis is dancing with the 200-day moving average that has started to turn higher. And what's interesting to me is that these most recent moves lower in price have not produced oversold readings by the RSI. And that tells us that, maybe some of the momentum to the downside could be waning. Now the RSI ticking back above 50. We'll see if it can hold in bullish ranges. We'll see how these stocks start to react to their earnings announcement. But KBE within our model, it does have a neutral ETF rating, but check out that power bar ratio, right? This is a fund that's just waiting for the market to recognize the bullish fundamentals of its holdings. 45 bullish or very bullish stocks in KBE for only 7 bearish or very bearish stocks. So nearly an 8-to-1 bull to bear ratio there. We're just waiting for this relative strength to kick in. Perhaps the earnings announcements out of the likes of JP Morgan and Citi here this morning could serve as a catalyst to start to drive the banks higher. This is a group that I'm watching closely because I think that if the market starts to recognize these fundamentals, there are going to be some good opportunities in the bank stocks into the end of the year. It's a big if. Let's watch how this week plays out. Technology, on the other hand, is a group that we liked and continue to like as it breaks out on a relative basis. Here's XLK, the tech select sector spider relative to the SPY, the S&P 500. And you can see nice steady uptrend off those late 2018, early 2019 lows. Goes into a consolidation and is now breaking up and out of that consolidation as it continues to trade above the rising long-term trend line. So for me, tech is an area where we want to continue to focus on bullish ideas, right? Especially because the RSI of the ratio is holding bullish ranges and is now starting to bolt higher, giving us a momentum confirmation to this breakout in price. And look at XLK on an absolute basis. On an absolute basis, XLK is also breaking up and out of this consolidation that's been in place since late summer. So continue to focus on technology with an eye towards the right areas of technology, right? One of the things that we've been talking about for the past couple of weeks is this rotation that's been playing out within the technology sector. We're starting to see and continuing to see really money rotate out of some of the high price / expensive software stocks and into the semiconductor group. We've been table pounding on the semis for a while and what that means for the market. But I think from an individual stock standpoint, there's some compelling opportunities in semis and an opportunity to rotate out of software if you are continuing to hold some of those software names that are beginning to lag. Finally, the bond proxies are beginning to fade. Here's XLU. We're looking at XLU here on an absolute basis, right? And it's still in an uptrend, don't get me wrong, but it's starting to catch our attention. What's really catching our attention is the potential bottoming process in rates. We highlighted it yesterday. We went through that analysis. I'm not going to go through it again here today. But utilities have done well throughout 2019 as interest rates have fallen, right? Now utilities are starting to stall out and test this breakout level. If interest rates really are beginning to move higher, it's going to become a headwind for the utilities, and I could have just as easily substituted the REITs here as well. Watching the RSI closely as it continues to hold bullish ranges, but a breakdown there coinciding with a breakdown of this support level would lend a momentum confirmation. And if we look at XLU relative to the S&P 500, this near-term uptrend line is now being threatened. So just something to keep in mind. We've been bullish on the bond proxies, but we're watching for a potential change. That's going to wrap it up for today. I hope everybody has a great day. Head over to ChaikinAnalytics.com/today for the email. We'll see you back here tomorrow.